Welcome to the Trading with Venus podcast, where we help you establish strong trading habits, generate consistent profits, and create the lifestyle you desire for yourself and your family. Now your host, Raman Gill.
Hi, welcome to the Trading with Venus podcast. I'm your host, Raman Gill. Today we'll take a look at what impacts the Forex market. Back in the day, we used to trade Forex just based on technical support and resistance, and you could do that. You could just use technicals, you could use the technical patterns, whether you were using just simple price action or you were using indicators or anything to do with technical aspects, you could just use that and make it work. These days, however, there is so much more to trading Forex than there used to be back in the good old days. First of all, Brexit. This is something that has been going on for a while now, and every time positive Brexit news comes out, the market will jump up. So it creates this expectancy in the market. For example, we saw last week, we heard news items that suggested that a Brexit deal was fairly close. Prime Minister Theresa May was quoted saying in the Times that they were just about to sign a deal and all the main points were settled or almost settled, and that pushed the market up, and right now British pound has been up because of that. So things like this that didn't used to really play back in the day or were not that big an issue have now come into the market. So if you are to get a Brexit deal signed, British pound will likely go up more, and then as we can see, the shorts have been increasing, which means it is likely to crash after that. It may not crash completely, but we'll have that big push up momentum move, and then likely we'll see people closing out some positions and it will change the market. So overall, things like this, external things like Brexit, have a big impact on the market. Another thing is stuff that's going on in Europe. So right now we have seen that Italy is kind of doing their own thing around the budget, and there are concerns that are coming up in Europe that could have an impact on euro. So it seems like the political tensions are getting bigger now, and not just in the peripheral countries where before in the developing countries where they didn't really impact our majors. Now we are seeing a lot more political stuff going on in the more of the developed countries, which will have an impact on the Forex market. So whatever happens in the Eurozone is likely to impact euro. So that's another thing. And then we have US. We have US elections this week, and as a result of that, we will see volatility in the market. And also, back when we have had presidential elections, we saw that market moved a lot during the elections as the results were coming up. And prior to the elections, run up to the elections, we saw that there was a lot of volatility in the US dollar as well as the equity markets as a result of that. Now with the midterm, there is of course volatility in the market around the US elections, maybe not to the same extent as we saw with the presidential elections, but nonetheless, any political situation or risk will have an impact on that currency. So keep that in mind. And then we have the trade wars. Before, we didn't have to worry about trade wars as much because most of the nations wanted free trade, and we saw more and more opening of the worldwide market, and we actually saw this liberalization wave across the world where different countries were opening up their borders because they wanted more trade. And trade works both ways, so you have imports as well as exports. Because the countries wanted to export stuff, they had to open their borders to importing stuff as well. And as a result, the free trade actually became very important in the world. And now we are seeing that US is taking a different stance towards that. US was one of the markets that was really open, and they have always been pushing free trade, whereas other countries were more into protectionism. We did not see that from US as much. And now US is going the other way, where US US wants to protect its economy and they want to kind of balance out the exports versus the imports. That has now resulted into trade wars. So now we have problems between US and China. China is a big exporter, as well as Japan, and now with trade wars going on, we don't know what will happen. Anytime there's a positive news around the trade wars where the tensions are easing up, we see that the equity markets go up and Japanese yen will likely drop, which means Japanese yen crosses go up. However, when we see fear in the market around trade wars, when we hear news of countries not participating or countries not getting along on trade war issues, that causes risk in the market. And as a result of that, we see that safe haven assets tend to do well. So Japanese yen, gold, those do well, whereas the stock markets tend to drop on that because then the companies are not as profitable. So these are some of the things that are impacting the market today, and these are the things that we have to watch out for. So we can't just look at our technical analysis, but we have to focus on overall market conditions so that we are able to see these things. Now, how do we do that? First thing that we have to pay attention to are our news reports. So we're looking at our calendar, economic calendar, and paying attention to what kind of data is coming out, because data is becoming very important. Monetary policy is changing, and a lot of the central banks are now starting to change their monetary policy and tighten it. We have seen Bank of England do that. We have seen Bank of Canada, Fed, all these are changing their monetary policy. Even ECB, they have cut back on their asset purchase program. So that's another thing that's changing, whereas in the last 10 years we have seen the central banks actually go into expansionary monetary policy. Now they're going into contractionary monetary policy, so their stance is changing as well. That's another thing that's being thrown into the markets. And as a result of that, the markets have become more volatile and things change quickly as a result of that. So we do have to keep all of that in mind. Now, how do we deal with that? Like I said, first of all, we have to pay attention to the news reports. Second, keeping an eye on Bloomberg and Reuters, especially their market section, because a lot of times these two services actually provide services to more institutional traders. So you have Bloomberg Terminal and you can buy Reuters news feed. So because they put so much information together, they do give out some of that for free as well on their website. So even though as retail traders we cannot afford a $100,000 Bloomberg terminal, but what we can do is at least go read those articles, because even if we don't get all of the information, we will get some of the information. And why not get it from somebody who's actually an expert at putting this information together, which is Bloomberg and Reuters, which are the two main news feeds that we have. Another thing we can do is when we look at the markets, we have to start thinking in the overall market sense. A lot of times I see that traders get stuck just on the chart. So we have to change our mindset around that. We have to start viewing trading in a holistic sense rather than just focusing on the charts and getting too stuck on the charts. So very, very important for us to do that, and just being overall knowledgeable. So we do need to understand the economics a little bit better because they play such a big role in our trading these days. We have to keep track of what's going on in the politics in different countries. We have to keep track of what are the imports and exports of different countries, because gold, for example, is related to Australian dollars. So we have to understand these correlation between different things and also pay attention to market sentiment. What happens when the market sentiment turns too bullish or too bearish, and what happens after that? So once the market gets pushed up, what happens? It'll create a big vacuum that will then come and get adjusted. So these are some of the things that we did not have to worry about back in the day, or didn't have to worry as much about it. Nowadays, I feel like there's a lot more stuff that we have to pay attention to. Therefore, as Forex traders, we have to be careful when we are trading. So making sure your position size is small and making sure you understand the overall market. Those things will be very important for your trading. That's it for today. I hope you enjoyed this episode. For show notes for this episode, please visit tradingwithvenus.com/podcast page. I'll see you next time.
Thanks for joining us today. With much gratitude, your show host, Raman Gill.